What up, guys? Jay Manchin here, and I'm back with another video. The Federal Reserve will most likely raise another 25 basis points at the next FOMC meeting. Now, I do think this will be a mistake, as we're already starting to see and already have started to see effects from the previous rate hikes. Let's look at the banking crisis. So remember, this all started a decade ago with banks, more than a decade ago at this point, with ZIRP, or ZIRP, Zero Interest Rate Policy. This enticed banks and larger institutions to load up on long duration assets cheaply, as well as borrow cheap capital. Now, fast forward to today, where we see a temporary run on the banks. In addition to those banks' long duration assets being valued less when it comes to resell them for liquidity to handle withdrawal requests. So these bank failures wasn't because we rose interest rates so quickly, even though that influenced it or aided it. It's that we lowered interest rates to the zero bound in the first place, and we were forced to print money because we couldn't lower it anymore. So these rate hikes essentially undid what they did, over a decade ago. Now, inflation is also still higher than they would like. It has not come down much at all. And the CPI report comes out Wednesday. That's going to be a really important factor in the next meeting. If we got somehow magically a 2% print on the headline CPI, well, of course, that could change things. You're definitely going to see a pause, but I doubt it. And remember, all this is about getting inflation or price stability back to normal, because longer-term inflation is more dangerous than shorter-term financial stability, to the Fed at least.
It is our job. It is our institutional role. We are assigned uniquely and unconditionally the obligation of providing price stability to the American people. And we're going to use our tools to do that.
And I think he's going to hike because CPI, it won't come in better than expectations. It'll either come in pretty much right at expectations or worse. It's not going to be better than they thought. I mean, the labor market is still in a good spot as well right now too. Jerome Powell still has to fire a lot of people from the labor market in order to feel like he's gotten employment down to a sustainable level. Right now, considering these circumstances, we are still overemployed. So we do need to see more rate hike effects on the labor market as well. So while inflation is still higher than they would like, I do believe hiking another 25 basis points, which once again, I think they will do, it will be a mistake. Credit conditions are the tightest they've been since 2013. And add another rate hike onto that, I mean, you're gonna contract credit even more. And so, it's gonna be a bad spot for the economy. This is probably the most confusing economy, all things considered, at least in my lifetime. And I've talked to some older folks in their 50s and 60s, in their lifetimes too. It's never been so muddled. What do you guys think is gonna happen? Do you think that a 25 basis point rate hike will be a mistake at the May's meeting? Do you think we should pause? Do you think everything is already? Let me know down in the comments. Appreciate you for watching. Like, comment, subscribe, and I'll catch you on the next one.